we have both Rajesh Palviya as well as Ajay Bagga, who are going to try and help us break down how the market is doing currently. And let's quickly go on. Let me first take it to Rajesh. Rajesh, talk to us about how you're looking at markets. How should one look at markets next week? We are rather rebounding back. So will the markets be in a tight band? Are you seeing some amount of correction? Are you now seeing upside? How are you looking at it?
Good afternoon. So, if we look at the overall week, yes, some corrective action was there in market, and market has given a breakdown to its important put base, which was at around 19,600, and almost we are at 19,500. So that put base has been broken by the Nifty in this current week. Even Nifty and Bank Nifty both slipped below to 20-day moving average, which is also adding up some bit of negativity on the near-term trend. But if we analyze on the short to medium-term perspective, the overall setup is still on the bullish side, as Nifty is very much holding its earlier breakout, as well as the put writers are now taking positions at around 19,300, 19,400 strikes. So that area is likely to act as a support area for coming trading session. So looking at the overall setup, we expect some consolidation is likely to happen in the coming week. Could be the range could be 19,350 to 19,650. This could be the possible range for Nifty. And once we able to give breakout or breakdown above this range, then we can see a further fresh move from the for the market. But on the Bank Nifty, 45,200 is the immediate crucial hurdle for the Bank Nifty, and until Bank Nifty not crosses those level, some pressure we can see in the Bank Nifty also. On the lower side, 44,700 and 44,600 are the immediate and crucial support area. If we breaks below those level, then Bank Nifty may also show some weakness towards the 44,400, which is the next important put base for the coming weekly expiry. So both indices are looking slightly on the weaker side for near-term trend, and some consolidation we can see in the coming week for Nifty as well as for Bank Nifty.
All right, thanks Rajesh for that view. Ajay, let me come to you then. And we have a big event lined up for us next week. All eyes are going to be on that MPC meet outcome, which is going to come out on the 10th of August. Now, with inflation soaring, especially, let's take a look at the tomato prices. Today, on Friday, they touched the 270 rupee per kg mark. They're expected to cross that 300 mark very soon. With inflation soaring, do you think we can expect a pause, or can we expect a hike coming in from the MPC?
No, I think RBI will still be in a pause mode, but in terms of the outlook, they will stay, withdrawal of accommodation. So right now, there is no reason to hike further, and a rate cut is out of question until we get more clarity on the Fed. The big issue is the differential with the US interest rate. So RBI watches that very carefully, and now we have seen that compression of that differential. So we are expecting some comments on that as well. But overall, looking at a pause and no change in the policy stance, the inflation forecast might be hiked a little bit for the next 2 quarters on the base of vegetable and food prices going up. Also, the oil price going up will be mentioned by the RBI. That has a cost push impact in the economy. So those prices going up, and given the government will probably want to hold the oil price line as well as the retail petrol, diesel, and cooking gas prices go. So that could lead to more fiscal deficit pressures on the government finances. I think those things RBI will watch carefully, but this time is a pause.
Thanks for that, Ajay. Let me quickly move on. Rajesh, two quick questions. One is your outlook on the broader markets, because what we've seen from the broader markets, at least over the last couple of days, is they've at least tried to outperform, or they've held up quite steady despite the Nifty feeling the heat. So how are you looking at the broader markets in this kind of an environment? And any interesting sectors that you're looking at the moment?
So definitely, yes, a broader market is showing different picture as Nifty is in corrective move. But if we look at the overall market breadth as well as the mid cap, small cap space, that is showing different move altogether. And we still feel that mid cap, small cap space is going to perform further higher. And we are seeing that stock specific action is taking place in the market on the buying side. So that is sentiment is on the bullish side. Yes, some corrective move could be there for index, but stock specific action is likely to continue. Some of the spaces where we are focusing at the current juncture from some of the sectors like sugar space is one sector where we find some buying interest is taking place. And we do believe that some sugar stocks like Balrampur Chini, Triveni, Praj, these all stocks are showing strength, and we expect furthermore momentum is likely to continue in this sector in the coming week. Another sector which we like at current juncture, that is real estate. After a brief corrective action, again most of the real estate stocks are again showing buying interest, and the stocks like Oberoi Realty, DLF, even Brigade and other stocks are also showing prestige. So these all stocks are showing good buying interest in this decline. So we expect a real estate, sugar space, and pharma. These three space can be looked at for near-term perspective, and we expect stock-specific action is going to continue in these three space.
Ajay, let me come back to you then. And we are at the fag end of the earnings season, and so far we've seen a mixed set of numbers coming across a variety of sectors. We've got IT, pharma, new age tech, all of them reporting a very varied set of numbers. To give an overall outlook on what quarter one has looked like, do you have any views coming in over there? Do you think we've had a fairly stable quarter one?
No, it is mildly disappointing, I would say. Downgrades are more than upgrades. What we were expecting, banks would do very well. Auto would have an order of magnitude, 2 times to 4 times kind of profit growth in auto. Chemicals going down, cement showing poor numbers, infrastructure doing well, telecom poor numbers, IT flattish with flat to negative guidance. It has come out on par. So that way, the forecasts have been correct. What has been mildly disappointing is the management guidance remains quite cloudy. It is not as optimistic as the street was expecting, more downgrades than upgrades. That's a worry factor. But the issue will remain global. I think until we get a signal from the Fed either in September or November that they are done for this rate cycle, we could see sideways markets. India is in a sweet spot economy wise, but we are getting impacted by the global issues, and the FI outflows are hurting our markets.
Right. With that, we are right at the cusp of taking a very short break.
Rajesh, let me quickly come to you then and share with us your picks. What picks are you spotting for us for the week to come?
So pharma is a space where we find a lot of stocks have given a breakout. So Lupin is looking very attractive. The kind of addition throughout the week we have witnessed that it clearly indicates that furthermore upside we can expect in the coming week also. Stock managed to give breakout on the daily as well as on the weekly time frame. So looking at the breakout, we are bullish on Lupin and we are projecting target of 1120. Keep stop loss of 1030. Second stock which we like, that is Poonawalla FinCorp. Series of higher top, higher bottom formation is taking place. This is the fourth consecutive week where stock is forming higher high low formation, which clearly indicates that there is a sustained buying action is happening in the stock. Almost stock gained around 10% for the week. Very strong bullish candle for this week. Looking at the breakout and the buying interest on the delivery side, we expect that Poonawalla FinCorp can continue further more upside. We are projecting target of 445, 450. keep a stop loss of 407. And the third stock is Voltas. In the current week, stock managed to give breakout of last 5 week consolidation. Stock was in oversold trajectory, and the kind of addition which we have seen on the derivative front, it clearly indicates that now the long positions are getting intact in the stock, and stock may exhibit furthermore upside. We are projecting target of 850. One can buy with stop loss of 808.
Rajesh, thank you for that. Let me quickly take it to Ajay. Ajay, a slightly more open-ended question for you. We had 40 out of 50 of our Nifty 50 stocks which have declared earnings. What within this basket or what within any sector really stood out for you in this earnings season? It could be commentary, it could be something that you took out of this particular Q1 earnings as of now. Of course, now we have just 10 days to go to close out our earnings for Q1.
One is the very strong turnaround in PSU banks. Overall bankings will contribute a huge chunk of the Nifty profits this year. Metals were weak as anticipated. Cement was weak, but cement is coming back stronger, Harsh. So I think interest is growing. Other thing I would like to mention, what you were correct, nearly about 2 months back, you had asked me on pharma. And I was not very clear still on pharma. I said pockets of pharma are looking good, but we'll get back on that. But pharma has done a very strong performance, right from a pharma ETF to buying the top end pharma companies. I think there's a lot of opportunity in pharma that's coming through. So you were spot on. I was a little more circumspect and didn't call it right. The third thing is the mid cap, small caps are continuing a very strong outperformance. So maybe that shift is happening where the larger part of the index becomes more of laggards, and we see small cap and mid cap coming back to their old glory. They have outperformed over the last 1 year, but on a 3-5 year basis, they are still lagging. So maybe that part is coming through. And fourth, the thesis that's coming across very strongly is the 4-5 year view, where, on a 160 lakh crore kind of consumption economy in India, of 280 lakh crores of GDP, the consumption is 160 lakh crores. We are looking at 3 lakh crores over the next 6 to 7 years. So all consumption themes, the funders of that consumption, and the infrastructure builders, the home builders of that consumption, I think those will do well. That's a mega theme that's coming through.
Right, on that note, thanks to Rajesh and Ajay, both of y'all, thanks for taking the time out and joining us.